A Delaware Statutory Trust, or a DST, is a real estate investment vehicle that provides individuals access to properties that are often significantly larger than they could acquire on their own. In many cases, properties are of the same scale and quality as would be owned by institutional investors such as pension funds, insurance companies, or REITs. An important feature of a DST is 1031 exchange eligibility to individual investors both upfront and upon exit. This benefit is generally not available to other co-ownership structures such as LLCs, partnerships, or REITs. DSTs typically provide monthly tax-advantaged income, which in some cases may be fully sheltered from income tax liability. DSTs are passive, professionally managed investments. Many DST sponsors also manage investments for institutional investors or other large-scale investment vehicles. DSTs cover a wide range of property types, including apartments, industrial, self-storage, medical office, and many others. The prepackaged nature of DSTs combined with accessible minimum investment amounts allows for the creation of customized, well-diversified portfolios which may help manage investment risk. As a primary vehicle behind investment property wealth management, DSTs may alleviate ongoing landlord duties, provide recurring monthly income, and potentially provide significant tax advantages. Because it's not about how much you make, it's about how much you keep.